Hi, everybody. This is Dan Sheridan. Welcome. Sheridan Mentoring is Thursday, February 16th, 2 days after Valentine's Day. There's still a lot of leftover candy and chocolates hanging around. I'm from Chicago, and the chocolate, I think of Fannie Mae. I know every place has got their own chocolate, but I think, oh, geez, Fannie Mae in Chicago is their really good chocolate. I would get these buttercreams. It's amazing, like one that's the size of maybe like a $50. I don't know if they cost like $1.40 each one, but they're just, oh man, really good. Anyways, something to look at. Let's look at the market, and then I'm going to share a trade, a live trade we have on. We put on Tuesday, which was the first day of our 3K class. Plan to make 3K and 25K, and a lot of it's based on turnover. You put trades on from 15 to 40-day duration, you get them off in 20% of the duration. Turn it over, positive theta trades. I'll go over one. But as we look at the market, again, not much news going on. As of Tuesday, Feb 16, this is about 9:30 Central. But if you look at the market, the news is out. The CPI and the news that came out Tuesday before the opening, and the market's kind of responded kind of neutral to a bit down. We're kind of hovering over that 4,100 strike. You know, right now on all I have on this chart at this point, I got a 6-month price chart. I've got some Bollinger Bands here in the purple, which is basically just standard deviation. You know, when we get to the top of the purple or the bottom of the purple, it just, you know, it's kind of the theory of, you know, pulling that rubber band apart. That when you go too far away from the mean, it'll bounce back. And you can see today, the low of the day was 40.91. You know, we got to that lower end of the band in the Bollinger Band, and then we bounced up a little bit, right? We're 41.14. We were a little bit below there. So those are good, at least for guidelines. I don't get too excited about it, but good guidelines to have. The other little doodads I have here on, at least on mine, is you got a 50-day moving average, and you got a 200. Obviously, we're well over the 200-day moving average of 39.43. SPX is at 41.13. But we're right around, if I'm looking more of a shorter term indicator, like a 9-day moving average exponential, it's like at 41.18. We're right there. We're kind of, and it usually kind of gravitates towards there like a magnet. Now, again, you're hearing me say a little bit of technicals. You might say, well, Dan, sounds like you know what you're talking about. I don't, right? I'm not, you know, I was at the CBOE many years involved with trading, but, you know, I mean, we're more like volatility, risk management, and all that. You know, we follow where prices go, but technicals were never, yeah, some people got more into it, but I think people in the retail realm are more into it. But, you know, I'll look at some of the students that we have, and they'll teach me some things. But I think they're good if you can use them correctly with the risk management and the range-bound trading. I think they're a big help. But anyways, we're right around that short-term moving average. You know, it's like the SPX wants to kind of break out and kind of start this recovery from the long downtrend, but we haven't started yet. And basically, we're in a range, right? What do range-bound traders want? We want a range, right? And most of the trades we're in, we're going to be in 20% of the duration. So let me show you a trade we put on Tuesday in the 3K class. And again, what's great is you learn these trades with us. Kind of you get the 2-for-1. You get the teaching, but you get the practical trades and the why. So I'm not pulling something out and say this is the boogie woogie trade. And if you do the boogie woogie like me, no, it is, call it what it is, right? I'll teach it, So here's a double long diagonal. We probably put it on at around 41.30 in the middle here on Tuesday. And today we're a little bit lower. So we're at 41.14. And what this trade is, the blue is the expiration graph. I'm buying the Feb 27, selling the Feb 24. So if you look at Feb 24, 8 days to go. When we put it on 2 days ago, it was a 10-day trade, right? Their shorts expire in 10 days. Now it's 8 days left. So, when you get a short-term trade, I don't care what it is, butterfly calendar, credit spread, the name of the game is your theta. In the middle here, this is think or swim, TD Ameritrade. You got your Greeks in the middle, your live Greeks. And you can see on this trade, it says 3 double diagonals. This is really, we call this a double long diagonal. So, double long diagonal, double diagonal, iron condor had the all same foundation. You're selling an out of the money call. In this case, when I did this Tuesday, so the out of the money calls, the 41.75s, selling the 40.80 puts. What's that called? It's called a short strangle. What's that? You sell an out of the money put and call. Why do you do that? You get theta, time decay in your favor, and probabilities. And then you buy your hedges, right? So we sold our options, Feb 24, 10 days away from expiration on Tuesday, 8 days away from expiration today. So when you get a short-term trade, it's oozing with theta. This is about a $3,000 trade, right? And, when you look at the theta, the theta is about over 6% yield a day, right? Now this is a theoretical number, but it's at least a something to start with. So, these type of trades, a 10-day trade, if I'm looking at being at 20% of the duration, I'm only looking at being in a couple of days. This is the second day, and I'm trying to get out of it. You can see, a lot of theta. So I'm selling the Feb 24, and then I'm buying the Feb 27s a little bit further out on the upside. I'm buying my 5 points before the short strike, the Feb 27s. And then on the downside, I'm buying 10 points before the short strike. Those are my hedges, right? Hedges. The reason I'm doing the trade is to get this positive time decay. How am I getting positive time decay? The ones I'm selling are going to decay quicker than the ones I'm buying. Why? Because the ones I'm selling are Feb 24, the ones I'm buying are Feb 27. So we're in the middle, as long as we're between, this is the expiration graph in 8 days, as long as we're between the tips of the igloo or whatever you want to call it there, which we're right here, 41.20. We're percolating like a good cup of Folgers coffee, right? So we paid $10.75 in class on Tuesday for 3 of them. Whereas my Italian friends would say, tree, what tree? But if you look right now, so we're up on this little over $3,000 trade. If we put it at 41.19, it varies. This says we're up about 120 or whatever. How you calculate that, right? 150, whatever. I paid $10.75, and it's trading around 11.15, 11.20. It was trading at 11.40 earlier in the day when the SPX was down more. So I'm hoping if this settles today or tomorrow at the latest for a 10-day trade or 8 days today, I want to be out on a 10-day trade, 20% of the duration, 2-3 days. So anyways, if you want to work on the craft together with live trades and we talk about it and teach you to help you try to become an independent craftsman, join us today. Come to Sheridan Mentoring. You can sign up and still jump in. We just started. We're just going to start the second class today. The classes are recorded. So if you just get in the first week, and we'll go a month on this class. So folks, we'll see it. We'll see it today. And the classes go Tuesday and Thursday. The 3K portion starts at 1 Central, but we add a whole 45 minutes before that at 12. Or if you're more beginner and you need to get refreshing or learn the concepts that we're talking about in the 3K and the strategy. So, you're getting about 2 hours, a good 2 hours for this. So, all right, folks, I better run here. We'll see you in class today. And you can sign up on Sheridan Mentoring if you're interested. All right, thank you. Bye-bye.